Tony Saganaki talk more about the quarter and the stock. Tony, I think you put it best. You said it really doesn't get better than this, but your more serious point is that it might have been too good. Can you explain?
Sure. No, you're absolutely right. It was a fantastic quarter on every single dimension. But we do think that Apple is benefiting from consumer spending shifts due to the pandemic. Consumers were not going to restaurants. They weren't traveling. They were staying at home and working at home and learning from home. And that's Apple's sweet spot. They sold a lot more iPads and Macs because of that. Consumers downloaded more apps because of that. They had more money to spend on the highest priced iPhones, and all of those showed up in the quarter. I just think those spending shifts might change over the next, 3 to 6 quarters as the economy opens up and people start going out to dinner and have disposable income to go on holidays. And Apple will then face really, really tough compares and probably not the same level of demand. And that's the big question. That's why the stock isn't really doing anything, despite big earnings revisions, is it was almost too good. And it sets up tough comps. And I think because of the secular spending shift, I'm not so sure there's going to be as many people lining up to buy all these products a year from now.
Now, that line of thinking has gotten some on the street. Goldman's a good example of taking that too far and ending up having to turn tail. To what degree would relative outperformance on the chip shortage, for example, offset some of those concerns you just lined out?
Well, look, I think the next couple quarters will remain strong because those trends are still in place. There's big backlogs for PCs. There's big backlogs for we think, remote learning type devices like Chromebooks and tablets. And so I think that will persist. But again, it's really important to put this in context. iPad has not grown in 5 of the last 7 years. It grew 79% this quarter. Doesn't that seem to be a disconnect? Mac on average has grown 3% a year for the last 5 years. It grew 70% this quarter. I mean, clearly those numbers they're not only fantastic, they're just stratospheric, and quite frankly, they're disconnected from what the secular growth rates are of these businesses. And the explanation is that there are really, really favorable tailwinds at work right here.
Yeah, your incredulousness is not going unnoticed. I think many people feel the same way, Tony, on the back of those numbers. Yet, as you also mentioned, shares are only up about 0.6% today. If this can't move the stock, which is already an underperformer this year among the big cap tech names, what will?
Well, I think that's the debate among investors is, the stock entered the year expensive for Apple, trading at about 30 times earnings. And numbers have gone up, so the stock has gotten less expensive. But it's still trading at about 25 or 26 times next year's numbers, 2022. When we compare that with Google and Facebook, who had blowout quarters, Facebook's trading at 20 times, Bernstein's 2022 estimate for Facebook. It's trading at 22 times Google's estimates. And I think some investors would say, look, those stocks maybe have better secular growth stories. The pandemic has actually structurally improved advertising. The pandemic has certainly improved work from home for now and improved people's disposable income for iPhones for now. But I think, there's a question mark about whether that will be sustained in Apple's business. And there's a question mark about whether Apple can grow next year. And yet for some of these other tech companies that are trading at similar or cheaper multiples, those questions don't really exist. And that's why, you're seeing Facebook up 4%. You saw, Google up 4%. All 3 companies had blowout quarters. But I don't think there's the same concern about, what might happen next year as there might be for Apple, let's say.